Tax season is in motion. Are you ready or are you overwhelmed? Well, in this episode, I'm going to talk about how to prepare for tax season so that way we can keep your stress levels low, you can avoid penalties, and we can maximize those deductions. And just so it's noted again, I am just a bookkeeper. So any further tax questions you may have, please speak to a financial advisor, please speak to an actual CPA. I just do bookkeeping. I am just a bookkeeper, just providing surface level information to help you prepare for tax season. All right, let's get right into it. Oh, for those who don't know me, my name is Akila McIntosh. I am a certified QuickBooks Pro advisor, and I help business owners organize their financial transactions. So now let us begin. So the first thing you want to do is make sure you're starting early. Don't wait until the last minute. Late preparation is going to lead to missed deductions and penalties. So, what are 3 things that you can do to prepare for tax season? First thing you can do is mark key deadlines. Make sure you know when your quarterly tax deadlines are. Make sure you know when your federal and state tax deadlines are, which are most of the time are going to be your quarterly is going to be every three 3 months, 3, 4 months. And then your federal and state tax deadlines, typically most of the time is going to probably be in April. Second thing is when you'll create a tax prep checklist. You want to list, so make sure you get all your forms in order. Make sure you get all your financial records, any receipts. Again, you'll need those for when you need to take those deductions. And then lastly, schedule a weekly or monthly check-in. So just set some time aside just to review your finances. So the actionable tip I want to leave you guys with here is to make sure you set a tax prep deadline at least a month before the actual deadline. So whether it's your quarterly taxes or you're paying your federal and state tax, make sure you at least organize your finances and look through them before you need to submit them. So, organizing your financial reports. Why should you do it? Well, it's going to make your tax filing a lot faster and it's going to be more accurate. You're also not going to be missing records could lead to IRS audits. And I've mentioned in previous episodes that you don't want the IRS poking around. Uncle Sam wants his money and you have to cough it up unless you can manage to take care of those deductions, take some deductions that will lower your tax bill as much as possible. Might not even pay anything, but don't give the IRS a reason to come looking around because you chose to neglect, your income by putting less than you actually made. Like just don't give them a reason to come snooping around. So some, things that you're going to need, like it'll come down to like income, W-2s, and this can apply to business owners and, individuals. Your W-2, obviously, if you're employed, you'll need that. If you're, a freelancer or a contractor, you need that 1099. And then for all my business owners, we need that profit and loss sheet. And then if for your expenses, the deductibles, that's what you need your receipts for. And so that will be able to help you lower your tax bill. Any charitable donations that you gave money to, you looked at as an expense. And then lastly, any loan and investment records. So mortgage interest, student loan interest, anything you make from capital gains and losses from trading stocks or crypto. So you just want to make sure you got all of those, all that paperwork in order before you're ready to submit it. All right, reconciling your accounts. So this mainly is going to apply more for business owners who actually have bookkeepers. And, this is something I do myself. This is something I would do for all my business owners. I've talked about reconciliation before, but for those who may be here for the first time and don't know anything about bookkeeping, reconciliation is just when, as your bookkeeper, you just compare financial records with the bank statements to just make sure that they match up. So even if you're not paying a bookkeeper and you're choosing to do the bookkeeping yourself, you want to make sure you are reconciling your accounts to make sure that everything does match up. So why is it important? Again, you want to avoid triggering IRS audits. You don't want the IRS poking around. Don't give them a reason. I cannot say it enough. We don't want the IRS around. And then also, it just makes sure that your income and your expenses are accurately recorded. So, how would we reconcile? Well, again, this is just going to apply to myself or anybody, any business owner who does their own bookkeeping for their own business. First thing you're going to do is you're going to pull your bank and credit card statements for the tax year that you're filing for. Then you're going to check the transactions, all those transactions against your bookkeeping records. So you just want to make sure that they match up. Then you're going to fix any discrepancies, like any missing or duplicate entries. And by missing, meaning that there's transactions that aren't accounted for in either the software or on your statement, and then any duplicate entries that may look, you may see double in your accounting software. And then lastly, you're just going to ensure that your income and your expenses are all categorized correctly. That's why it's important to make sure that you hire a bookkeeper so that way they can categorize your transactions correctly. And so now, when it comes to identifying and categorizing your deductions, why does this matter? Again, you're going to help reduce your tax bill. You want to try to pay the least amount in taxes as possible. I know people have always talked about, well, why does Donald Trump have to pay zero taxes? Well, that man's taking deductions. That man is investing and he's taking advantage of the tax code, which is literally out there for entrepreneurs and business owners. It was made for those type of people, investors, business owners. And then also it'll help you prevent from missing out on deductions. I'm telling you, you take those deductions, you really get to see the difference in how much you would have to pay versus how much you wouldn't have to pay if you did take the deductions. So what are some common deductions for my business owners out there? Well, you got your home office, so you can write off a portion of your rent, your mortgage and utilities, vehicle expenses, things like gas, mileage, insurance. You got software subscriptions. So if you use QuickBooks, if you use some type of like AI platform or any platform to help run your business, that is also a deduction. Anything that's necessary and ordinary to helping you run your business can be considered a deduction. If it's necessary and ordinary, you can deduct it. Any marketing costs. This would be like any ads you run, your websites, social media management. And then if you have payroll, if you have employees, you have to pay payroll or contractor payments, those 1099s and W-2s that you have to give out as, at the end of the year or however often you pay your employees. But those are all some of the common tax deductions for business owners. And then how do you track deductions year round? Well, this is where you don't want to commingle funds and you want to get yourself some business credit cards. Use business credit cards for business transactions only. Don't use personal credit cards for business transaction because then you're going to commingle funds and you're going to give the IRS a reason to come poking around. Don't do it. Get yourself some business card. Get yourself a business credit card, 1, 2, however many you need. But just keep the personal and business transactions separate. And then you want to make sure you're regularly updating your expense categories in your bookkeeping software. But, if you have a bookkeeper like myself, you won't have to worry about that because I'll do that for you. But if you are doing your own bookkeeping, make sure you're regularly updating expenses category. So working with a professional. Ta-da, here I am in front of you. How do you know if you need a CPA or a bookkeeper? Well, bookkeepers, they organize records, we reconcile your accounts, and we categorize your transactions, which I've mentioned on numerous occasions. And CPAs, they're the ones who will actually do the taxes for you. You have tax strategists, you have the tax preparers, they'll file your returns, and pretty much they are the representation for if an audit is to occur. So bookkeepers don't do taxes. They don't do anything with the taxes. They'll just, organize and categorize your transactions and provide you the reports needed. Your CPAs are the one that's going to handle all your tax filing returns, finding you those deductions. That's what you have a CPA for. So when should you hire a professional? One, if your tax situation is complex, so you have a lot of investments, you have large deductions, you have multiple streams of income. If you want to maximize on deductions legally, hire a professional, get a CPA. And then if you're unsure about any tax law, like any slight inclination, hire a CPA. Get somebody who knows the tax laws so that way you don't mess up, so that way you can take advantage of all the deductions that are out there and lower your tax bill as low as possible. The less money I can pay Uncle Sam, the happier I am. And then you do have, so if you don't want to pay, it's a CPA to do all that stuff, you can file taxes yourself, So, there are things out there like platforms out there like, TurboTax, H&R Block that, they're pretty straightforward with the tax return. You just got to make sure you're doing it diligently and carefully so you don't miss anything. But I would just make sure that, you just double check your numbers before submitting. So that way, like I said, you want to make sure you're getting the absolute best out of, you want to make sure that to the best of your ability, you're being able to lower your tax bill as best as you can. So my suggestion to all would be to set up a tax saving plan. This is definitely a great idea, especially if you're a business owner, to make sure you have somewhere to store your money for taxes. So why do you want to save for taxes? Because you want to avoid a huge tax bill in April when taxes are due. And also, it'll help prevent cash flow problems. So at least every time you get paid, you always have somewhere you can store that money for taxes. Otherwise, you're not going to have a issue with trying to find out what money should I pull from and where am I going to get the money to have for taxes and stuff like that. If you just get an account and store it to the side, you won't have that problem. So how much of it should you save? So and this is just something I've learned from reading a book called Profit First. It's by Michaelowitz. It's a book called Profit First. And it pretty much breaks down like how you should have multiple accounts for your business. So you should have a income account, you should have a taxes account, you should have a operating account, you should have a profit account, and they should all have some type of percentage attached to it. So if you're a business owner, a freelancer, 20 to 30% of your income should be dedicated to taxes. So all the income that comes in, you should have a sub account where you can move and transfer 20 to 30% of the income to that account just for taxes. It's actually a very phenomenal system. It's a great system. I suggest that all business owners utilize the Profit First system. It's a pay yourself first system. So I would definitely take up that system. And then what are some best practices for tax saving? Well, kind of said it already. You want to make sure you have a separate account for your taxes. So like I just said with the Profit First method, you're going to have that income account, your OPEX, your taxes, and a profit account. whatever other account you may need, whether it's, you know, if you have like donations or like innovations, anything you want to put money other towards. But anyway, you want to make sure that you have money set aside. You want to have a separate account to put your taxes in. And then automate the transfers, whether you want to do it weekly, monthly, anytime you get paid, just put it on automate the transfers. And then lastly, make your quarterly tax payments. If you have quarterly tax payments, make sure you pay them on time. All right, guys. So we have reached the end here. If you guys did like this, please subscribe and follow. Hit that like button if you did enjoy, if you found value in this video. Also, follow the podcast on Apple Podcasts and Spotify. If you are in need of a bookkeeper, you can schedule a consultation. I will leave my website link down in the description for all those who are interested in hiring a bookkeeper. You can also follow me on social media. I am on Fanbase, Instagram, and Threads, all with the same @name, official Aquila. And also following my Millennial Gems page where I provide, bookkeeping tips and everything related to bookkeeping and business in the podcast. So that wraps up another episode. I will see you guys on the next one. Peace.